I'm going to show you the best Forex day trading strategy you have not tried before. I've been trading with it for over a year now and the results speak for themselves. So I hope you're ready and let's get on with today's trading video. Okay, so you have two indicator choices: moving average cross alert, which will be in the community scripts, the second one just over here by chart art. Just make sure in the indicator settings you have the long period moving average set to 200. The bottom right where it says moving average calculation, change it from 2 to 1. Also head over to the style section of the indicator and click off bar colors. Click OK and you will have the indicator set up. So you can use this indicator especially if you're a beginner, but for those that are not beginners, we're going to use simple moving averages. We will need two of them. Make sure the first period of simple moving average is 50 and the second period of moving average is 200. I like these ones because they are less cluttered. Okay, now for this trading strategy to work properly, we need the 4-hour, 1 hour and the 15-minute time frames to be heading in the same direction. To identify this, we need to look for a golden cross for the bullish market trend. The golden cross appears when the 50 moving average crosses the 200 moving average towards the upside. Once these two moving averages cross, this is a great indication for further bullish pressure and momentum. Each of the three trading timeframes has to have a golden cross. If it doesn't have it, trading is invalid. We cannot place a trade without them. After you find all of these requirements, we are ready to start looking for an entry with the overall market trend. Our main entry time frame will be on the 15 minutes. I found this works the best for day trading. So we can enter trades on 4 candlestick formations, and the first one I see is a nice tweezer bottom. As you can see over here, two bottoms are pretty much identical. The left side of the candlestick is smaller, the right side is taken over. It's a nice candlestick confirmation for bullish pressure. Then we have a similar one. It's a bullish engulfing candlestick, 2 candlestick formation yet again. Although similar, the first red candlestick is slightly lower. Then we're gonna move this just over here and we have the third candlestick confirmation, which is the long shadow. So as you can see, the candlestick just over here, the simple one candlestick, has a nice little shadow or a wick, which confirms there is a lot of buying pressure at the moment, which could be a nice indication to buy and enter the trade. If we move this once again, we have the last candlestick confirmation, I believe, which is the hammer candlestick. It's pretty much a one candlestick confirmation, but I found that it's better if it swallows the previous candlestick, which it does as well. A nice little shadow over here, no shadow at the top or very little. It confirms bullish pressure, and that's why we saw all of these candlestick formations going towards the upside. So even if you risked 1-to-1, all of these trades would have been pretty damn profitable. However, for perfect risk management, you always want to cover your moving average with your stop loss. As you can see, the stop loss is around 18 pips. 50 moving average is inside the stop loss. We got our tweezer bottom just over here. This would have been a great entry towards the upside, and you can potentially scale this trade further and continue trading until it actually crosses the 50 moving average. So from 1-to-1 risk reward, if you don't see a stop or a sign of weakening, you could have potentially banked yourself 60 pips over here, which straight away gives you a risk reward of 3.28, which is pretty damn good. Now here's another situation which could make you a lot of money. We had a bearish engulfing candlestick just over here, right? It crossed the 50 moving average. What do we do with that? We simply wait for another candle. What's the next candle? A bullish one. And because the bullish blue candlestick closed inside the red one, it becomes a nice inside bar candlestick, which means the red candlestick is the mother bar and all the other candlesticks that will follow, pretty much the baby candlesticks, until it breaks out the main bar. So this becomes a nice resistance and support over here. Some traders take the trade straight away if it's a bullish candlestick. So mother bar just over here. If it's a bullish candlestick, they take the trade straight away. So you could potentially long this position, just cover your moving average plus a little bit more, so 9.9 in this case, or you can wait for that breakout. That's why I draw the resistance and support lines. Let's see what actually happens with this trade. And as you can see, the market did respect the inside bar just over here before breaking, so you can potentially enter on that strong bullish candlestick just over here. Something like this would do. It's a little bit late, so we would would have to increase our stop loss quite a bit, 1-to-1 over here. But that is still a nice little entry, and let's see if we do achieve it. Yes, we do. Potentially, if you entered early just over here, basically seeing the inside pattern, move stop loss just around here. This is your support zone. You can, aim for a little bit more, 2.56 risk reward. So here's another quick example I would like to show you that likely will happen to you. So please listen. 15-minute time frame, everything is trending up. Unfortunately, we broke the 50 moving average, right? So currently trending down. Now, as we can see, we are approaching the 200 moving average. As I previously said, it's a much stronger moving support zone. So what do? Where do we enter? Can we enter? Well, we can't really enter at this point because everything is bearish. Look at this wick going towards the downside. This candlestick over here pretty much tells us that the bearish pressure has not yet stopped. We need to wait and see. The next candlestick, although dropped, pullbacks and closes as a nice shadow, indicating that there's a lot of buying pressure of the 200 moving average. This is the candlestick for your entry, and it's perfect because it gives you a really good risk to reward ratio. Now, these situations won't happen as often as others mentioned, but when this situation does happen, it's the holy grail, and I can promise you that you can make a lot of money. You can pretty much target this previous area of kind of resistance. Just 12 pips, something like that should be good enough. Let's see what happens. And there we go. It goes towards the upside. And can we actually reach it? There we go. We actually managed to bank ourselves 44 pips, risking 12 pips only. If you're trading off the 200 moving average bounce, don't be scared if it kind of does not break straight away off the 50, because you entered on a such strong moving average. Let the market play out, and usually it will be in favor because the 200 moving average is actually that strong. Join my trading group, Telegram and Discord. We are absolutely dominating the markets, and make sure to watch this video next because I show you another day trading / scalping strategy using the Heikin-Ashi candlesticks, and trust me, they are pretty damn good as well. A lot of Japanese traders are using this technique.